Welcome back to the CPA Revolution. I'm Sherina Padilla here with our tax strategy expert and co-host, certified tax coach and CPA, Jose Ortiz. If you are tired of traditional reactive CPA advice and want to turn taxes into a wealth building tool, you are in the right place. Hi, good morning. Hi, Jose. How's it going?
Sherina, how are you?
Good. We are here on another session of the CPA Revolution. And today we're talking about why the hours you track during the year can unlock tax strategies that many business owners accidentally lose. So I'm really excited about today's topic. And we have a guest also joining us later on. And let's dive in and talk about the hours for material participation and real estate professional status that everyone is so confused about.
Yeah, the thing about it and what made me write this article is we're in the middle of tax season, as you know,
Mhm.
and this is the time of year where all this stuff starts showing up, right? The lack of documentation, the lack of tracking hours. When they do track hours, they don't know what to track, etc. So there's three main areas where we want to talk about today, right? Active participation, material participation, and real estate professional status. So we're going to touch on each one of those.
Beautiful. And I noticed your upcoming Substack article talking about the write-offs, the entity structures, and all the different things that come into play. So I'm ready to dive in and see how we can add more insights to our audience.
Well, so we know about reps, right? Everybody knows about reps if you're doing real estate investments, real estate professional status. So what happens usually is we'll have clients who are trying to accomplish the minimum hours that are required, which are 750, and also meet the other criteria, which is more than half of the total working time, meaning I worked more than anybody else on my real estate, right? So
Mhm.
basically what happens is a lot of people understand that that you have to meet this criteria, but they don't necessarily know how to track the hours, what type of hours, and so forth, right? So basically what we're talking about here is how we can basically do that in an efficient way, right? Normally what happens is with my clients, I give them a template and I guide them through basically what kind of things will be permissible by the IRS, what kind of things are not, right? So travel, education, all those kind of things, IRS is used to seeing that that's not permissible, generally speaking. What is permissible are working with contractors, right? Doing all those management functions. But the problem
Mhm.
is that we're not used to tracking hours. And, I get that. Not everybody has that at the top of their mind, particularly when, they're in the midst of doing these renovations and all that kind of stuff. So basically, it's one of those things where I want to always be on top of my client, and we meet quarterly. So every quarter, we want to go ahead and review that rep sheet, make sure that they're tracking their time and make sure that they're doing it correctly so that it doesn't come under scrutiny when the tax return is submitted and the IRS reviews it, right? So that's basically one of those things, real estate professional status. The other one, it really comes up when there's short-term rental strategies, right? 7 days or less. One of the most common ways to meet the requirement for material participation is by spending more than 500 working hours on property during the year. Another is spending more than 100 hours while also performing more work than anyone else. In practice, the time is going to often, include, talking to guests, coordinating the cleaning, adjusting pricing, handling the maintenance task, all those kind of things. But again, people are not necessarily documenting it in the first place, or when they do document it, it's incorrect. So again, it's kind of trying to help build that muscle memory with our clients so they could start documenting, because people don't necessarily understand how critical this can be when it comes to time to file your taxes. So when I'm looking at something like this, right, let's just say it's a client that just showed up for tax preparation. I'm looking at that. It's the first time I see them or first time I look at their stuff. And it's kind of bad when I have to tell them, hey, this is not going to work. This is not going to fly.
Mhm.
This is not going to fly,
Right.
etc. So we want to make sure that, those people at home understand the rules, right? And that's going to be another topic that we can talk about another day, but understand the rules that are behind this.
And the importance of it, because the documentation, it's so important. A lot of investors, especially when they're starting off, they see like, oh, I have to keep receipts for everything. And that's already like a burden in its own. And then when you start talking about hours and tracking for material participation or real estate professional status, they're like, oh my God, if I can't even keep up with the receipts, how am I going to keep up with these hours. And it's so interesting. There's a huge need in the market for systems that are going to be able to assist in documenting these things. And, anything that we can do to alleviate the burden and use technology, right? We want to use technology. There's so many advancements. Like, why are we doing these things manually? Why are we keeping our receipts in a box? Same thing with the hours, just like you. I've seen different versions of spreadsheets for people logging hours, but sometimes the categories end up getting disallowed. So I'm ready to learn more and see how we may be able to facilitate the hour tracking processes for our audience.
Yeah, we're going to be bringing our special guest, Aaron Deswaza. He has a great product we'll be talking about shortly. But one thing came up while I was listening to you there. Not only obviously do you guys do cost aggregations and all that stuff in real estate, but you also do R&D credits, right?
Mhm.
So aren't R&D hours really, really critical to take to keep tracking?
Yes. So for small business owners, that's one of the hardest things to keep track, right? Especially if you're a startup and you're going through that process of experimentation, trial and error. You may have one engineer or one developer in your team that's doing all the work. And it's like, now you also have to track the hours, and how do you do it effectively and efficiently to make sure that you're keeping the records in place that are going to support you to be able to take the maximum allowed benefit on those tax credits as well.
Yeah, because I've come across situations where somebody can qualify for R&D credits, a company, right? They do their research development, but some of them have that kind of idea that, well, this is let's just say my lab assistant, and we'll just kind of use his hours. But that's not necessarily true. We need to kind of look at the hours that were dedicated to the research and development, not his entire
Right.
40-hour work week, right? So it's super critical, I would imagine, to keep track of that. So that's just another area. And I wanted to mention that because people at home may not be in real estate, right? So they want to kind of know where else, what other areas would this be really impactful?
Yeah, and business owners and overall that are in different industries, it could be manufacturing, automotive, food processing. It doesn't necessarily have to be someone wearing a lab coat, right? There's many industries out there that are going through processes of experimentation, that they have the possibility of being able to take advantage of these tax credits and get reimbursement on the wages that they're paying their employees for doing this work. And another item that they miss on is that not only the person doing the design work and the research activities qualifies, but it's a 3-level tax credit. So anyone that's supervising that person and anyone below them that's supporting them, those hours can also be included into the qualified research activities and expenditures. So it's really interesting how it all comes together. But like you said, Jose, we want to focus on a per project basis, not their full week worth of work.
Yeah. So that's something that I've seen, and I want to clarify for those people at home who have that kind of situation. The other thing, heading back to real estate really quickly, is the active participation. There's a clause there in the IRS that allows up to $25,000 in rental loss allowance if you actively participate. Of course, there's phase outs between 100 and 150K income, but you can understand that if you're not tracking those hours, and if you have this $25,000 that you may qualify for, how disappointing could that be if you didn't track the hours, right? Or if you can't substantiate it. A lot of people want to go back, right, and then try to document the hours there. IRS already knows that, man. They've seen this before. So, it's one of those things where we want to make sure that we have clean documentation and that it's going to pass the sniff test once tax time comes around. So without further ado, let's go ahead and bring in our guest.
Hi, Aaron. Welcome. Great to have you here.
Yes, thank you. Thank you for having me.
Aaron, thank you so much. Aaron, the way that we met was that I was actually talking to another group who has a investment product focusing on short-term rentals, and they mentioned your product, makeitdeductible.ai, and they use that to help their investors track their hours, which I found super interesting. That's why I wanted to reach out to you. Talk to me a little bit about how that works. Talk to me a little bit about your product, and then we'll ask you a few other questions here.
Yeah. So maybe it would be helpful to bring some context to my personal story for a few seconds. So I went down this path of, investing in real estate, equipment, things that I thought would give me a tax deduction and also give me a return. And as I was thinking about that and went through that due diligence process, I realized that there was a weak spot for me personally in this documentation of active participation, material participation, right? So I had some significant money at stake, and I was like, well, that's the weakest link in the chain. And, my background is in evidence. I was a partner at a big accounting firm. I audited large companies. And so I have a lot of experience in what is good evidence and what is bad evidence. And I looked at the state of the art, which is an Excel spreadsheet. And I said to myself, well, this probably is not going to hold up. It's like, and I've got some serious deductions, which is an asset, right? It's an asset for me that's at risk because I didn't keep good records. So, okay, there's got to be a better way. So I created an approach that would help me improve the quality of my evidence. And, that's kind of how it all got started. But I'm happy to talk about evidence in general and just talk about that if that's helpful to your listeners.
Absolutely. So let's talk a little bit about the kinds of activities that people often forget to track. You mentioned a couple there.
Yeah.
What kind of activities do they happen to forget to track, and what kind of evidence would they need for those kind of activities?
Yeah, I think you touched on this earlier, and I'm going to go back to you use the word muscle memory. So the first problem is most people don't do things as they're happening, right? So real time, contemporaneous is the technical term, is hugely important, right? After the fact, you're coming into the CPA's office and you're trying to retroactively write up stuff first of all, it's not good evidence. And second of all, it's easy to blow up in an audit.
Yeah.
So that's the first thing. You got to try to track it as it's happening, so contemporaneous, and that can be on a spreadsheet. So that's the first level, I would call it. And then in order to improve that, I've got two more levels above that, right? So one is connecting the dots, which is between the business, the event, the tax code, and the evidence in question, right? So if it doesn't connect, I use this example a lot. Like you could go and buy lamps at Target and you'd say, well, I spent 2 hours buying these lamps. Well, who cares? Does it have any relationship with why this is active participation? We've got to be at a fifth grader level and connect the dots between the lamps and the decor and the feedback. And therefore I rent more, right? So now you've connected it back into the business. And this is really important. Otherwise the lamp purchase and the 2 hours are meaningless. So this ability to connect the dots to the tax code and why this is active and why this helps my business is really important. And then the second level is the quality of the evidence. So a lot of people will send us, we require pictures, for example, in our product. So a picture of the lamp is nice, but that doesn't tell me about the 2 hours. The picture of you at Target is much more valuable in proving hours than the end product, which is the lamp. Does that make sense?
Right.
Perfect sense.
So we're talking about the two big things I tell people is, if you're doing this on your own, make sure you get this connection, document it, and make sure you get the evidence that actually supports the hours, not the end product. And if you do those two things, well, then your evidence is, 100x better than your Excel spreadsheet. I went to Target and bought lamps, right? That would be my base case. And then I would add these two things to get more defensible.
That's amazing. So talk to me a little bit about how your product beats the Excel spreadsheet.
Well, what we did is we try to make it simple. I hate new apps. I don't want to need another app on my cell phone.
Yeah, no,
What we did is we set up a WhatsApp chat service. Basically, you WhatsApp us the picture of you in Target and you send me, I spent 2 hours looking at lamps to try to improve the decoration, the decor in my STR, my short-term rental.
Right.
That's all I need. I need three things. So I need the picture, I need the duration, and I need what you did. And you've already given me over time, you've given me kind of where the location of your it's in Austin, it's in, this district, or it's in 30A on the beach, or whatever it is. So I know a little bit about your company. So I take those three things that you send me, and I take what I know about your background, and we keep learning more. Every time you send me a text, I learn more about you. We put it all in our AI engine. We've got an AI engine, and it spits out this memo on the other end that documents those 2 hours, not less, not more. It's 2 hours in one memo that ties it all together. So, what I said earlier, my business is short-term rental. My event is the Target trip. My tax code is how these lamps actually support rental income, right? Mm-hmm. And then finally, the evidence, the real-time evidence, which is the picture. So I've got all four things tied in a bow. And then over time, I collect 50 of these 2 hours at a time. Mm-hmm. And they've a binder that you get at the end of the year, a zip file. And so that's how we do it. We just help you with a text All you do is send us a text.
Amazing.
Quick question, Aaron. This is very interesting. So, as part of that memo, do you expand into other items like maybe adding mileage or bookkeeping hours now to record the expense and all of that? Like, what are the other items that you expand on this memo?
It's a great point. We are in the early days, so we have dollars. So if you send us a picture of a receipt, we'll put that in the memo, so it's tied together. But the reality is, for now, we've just focused on active only hours. Like we're really focused on things that are hour related. So equipment, short-term rental, reps. We also do aircraft. So if you're flying anywhere and those require hour, like flight time, why did you go there, buddy? You know, if it's not business, then those are big numbers too, right? I mean, an aircraft and depreciation. So anything that has a high dollar where there's high risk and the client recognizes it. You know, my clients are oftentimes like yours, dentists and doctors, like, okay, I can do one more root canal, you know, and they're willing to spend the money with us for us to help them with this documentation.
Yeah, it's a fantastic question. It is, you know, and one of the things I think about is, you know, we have these kind of strategies, these alternative tax investments for W-2 earners, high W-2 earners. Let's just say film production, right? So they go out and they invest in these movies, right? A lot of those require active participation, right? So how do they do that? Well, they'll fly them out to Vail for whatever film production festival, whatever it may be, and they do all these different things, make them watch movies because it's part of the research. So this is great for those kind of things. You know, it's not just real estate. It's an amazing product. So, you know, and that's the thing, unless you have a proactive CPA, your product is kind of filling in that gap.
Yeah, Jose, you know, most people we talk to do exactly what you described. They give their clients an Excel spreadsheet, a template, and say, go fill this out. And then they come back at year end and you help them and so forth. So what we tell CPA firms and guys like you is that, you know, listen, the level of compliance is hit or miss oftentimes. And so we're just helping your clients and therefore also protecting you a little bit from the risk, right? So as you sign that return and so forth, because, you know, the reality is that it's all in the day-to-day compliance. I mean, you can't really solve it on April 15th. After, right? And a lot of times we're just coaching people in that text chain, like, hey, can you send us a picture from Target? You know, we don't need this lamp picture. I use that over and over again. But or they'll say things like, you know, does travel time count? Well, did you have to be there in person? Well, it might. You know, if you can prove that you had to be there to supervise. If it could have been done by a phone call, well, then it doesn't count. So that's, again, like linking it to the tax code. We have an acronym for it, you know, the business, the event, the tax code, real-time evidence, BETR. And so that's the simple way for people to, you know, if they're doing it on their own, think about that acronym: business, event, tax code, real-time.
It's better.
It's better.
So obviously there's some element of coaching there, which is fantastic.
Totally.
Aaron, where do we find you? Where do our listeners find you?
Yeah, make it deductible. Very simple. .ai. Make it deductible. If you want to make it deductible, then you go to makeitdeductible.ai. So that's how you can find us.
Excellent. And of course, if anybody out there listening to us needs more information, please feel free to reach out to Sherina or I or Aaron directly. Aaron, thank you so much for making the time and congratulations on this great product.
Thank you.
It's truly an innovation and so much needed. So thank you for putting that together.
And everybody at home, thank you very much for being here. Until next time, Sherina, Jose, CPA Revolution. We'll see you next time.
Good job.
Thank you. Have a great day.